Marico's MD and CEO Saugata Gupta and begin by asking him about the company's key focus areas going forward. Listen in.
I think we have developed a robust pricing model which ensures that we continue to drive volume growth and market share and not sacrifice at the expense of short-term margins. Having said that, obviously, if there is input cost volatility, sometimes there are certain misses in certain quarters. Having said that, we are confident that if we follow this kind of a strategy, we are confident of delivering a 5 to 7% medium-term growth as far as Parachute is concerned over the next few years.
So how has pricing been, Saugata, and can we expect any more changes as we move into the next couple of quarters?
If you look at 1920 YOY, and it's just a broad outlook because input costs you can never predict, it's expected to be 15 to 20% lower, and therefore we would pass on some benefit to the consumers. However, it's too early to take any pricing call at this point in time.
Okay, Saugata, then let's talk about input costs too. And while the benefits of copra are very evident in not just this quarter, but in the previous few quarters as well, my question really is to do with input costs as a whole, because we're still seeing a little bit of contraction when it comes to our gross margins. Why is that so, and can we expect that to come through in the next few quarters too?
If you look at it, other than copra, obviously there are other factors like which are crude-based raw material and packaging material. There has been a YOY inflation. So I think other than copra, we don't see much relief. Having said that, I think we expect the operating margin next year to be in the region of 18% plus.
Okay, that sounds good. Then moving on to your value-added hair oils as well. At least some analysts at this point in time are saying that there's some sort of saturation in the markets, not necessarily on Marico's own account, also in terms of competitors too. Can you tell us a little more about how you see growth panning out here?
If you look at the overall growths of most of the players, I think the category growth is not a problem at all. In fact, what we are seeing is there has been a conversion that is happening at the bottom of pyramid in terms of from unbranded and unorganized players in a post-GST scenario where we believe direct distribution is a source of competitive advantage. Having said that, there are opportunities both at bottom of pyramid and premiumization. I think we have been a tad lower in volume growth compared to aspirations of double-digit growth, and that is because we have not actively participated at the bottom of pyramid, and also we have not done well in the premiumization end. But with the current slew of the new product pipeline which we have, we are pretty confident that we will be able to push this number to closer to double digits.
Okay, Saugata, and then let me come to the final question on Saffola. The growth here, as compared to your other aspects in your portfolio, is subdued. My question is, what are the challenges here, and what is the management? What steps are the management taking in order to address this growth issue right now?
Yeah, frankly speaking, I think we have struggled with Saffola, and we have not done a good job here. I think there are a couple of challenges. One is I think the kind of consumers whom we attract are actually increasingly consuming less oil because they are pro-health. Secondly, we haven't done much innovation at the top end. And thirdly, I think our ability to communicate differentiation versus some of the players, either through communication or through influencer marketing, hasn't done well. So I think it's a WIP. We believe that on the H2 we should be able to get 5 to 6% growth. But I think we have to do much more in this to get the growth back, and frankly speaking, it has taken much more time than it should have.